This is Eric Mother at Mother.com with about just under 2 hours before the market close for March 26th. This is the weekend market analysis for March 27th, 28th, 2021. Let's take a look at markets here. We see the market coming off the highs of the session. We'll see where it goes. Let's begin today's analysis by taking a look at the NASDAQ daily. And I want to begin here because market participants are clearly watching the trend line on the price for the NASDAQ daily to see whether it holds or whether it breaks. So depending on how you want to draw it, let's begin by drawing it two ways. So if we take the daily closing low right there, and there's a daily closing low, we can draw a trend line that looks like that. Actually, let me change colors there. And we can see the market at this very instant is trying to determine whether the NASDAQ can hold this trend line or whether this trend line breaks. Now, of course, those who are bullish would like to see the market eventually hold and start building higher around this area here. Bears would be encouraged if they see the market break that trend line, because it's going to lead to some selling, as those who want to protect their gains over the last year or so would want to lock in some profits. Now, that's one way to draw the line. We can also consider the other option, which is to draw the line based intraday lows right there from late March 2020, and there's an intraday low right there from early on this month. Connect those two and we end up with the following trend line. So again, the market's going to have to determine whether it has enough stability and energy to hold. Otherwise, again, what the bears want to see is the market cracking below that, staying below that, and the bulls will like to see the market hold and recover, build for potential future breakout. So I would say this is the trend line that market participants are watching. We'll see which way it goes. Personally, I don't think that's the most important aspect of the current market. And at any rate, if you take a look at the S&P 500 based on the uniformity principle, we see that the market moved out of a wedge here off the lows of 2020. We haven't been back to these levels. Take that RSI movement, draw a straight line, which is a uniformity support line. And we see that markets used this line to bounce over the last year. It held here on a triple bottom support for the lows there. So, in my opinion, it's what happens when the market comes to test this line. Either we break through it, slash through it to begin a major sell-off in the market, or the market finds support here and builds to the upside. So in my opinion, even on this chart, the RSI lows line or this uniformity line is more important. I also think, as I've been saying for a while, the RSI lows line for the NASDAQ, as an example, should be more critical than the price channel line. So I would say, let me take that off. So in my opinion, I would say breaking of this line would be more telling than breaking of the price channel. That's just my opinion. I tend to support the RSI in the sense that I believe the RSI gives us better insight into the market psychology. So the price, whatever happens to price, to me is irrelevant. It's what happens to these two lines on the RSI that is going to determine whether we are eventually going to bounce to build for potential move to new highs, or whether we are going to break below current levels and see the market enter into a new phase, aka a bearish phase. And with that, that concludes the free portion of this video. The rest of the video is for paid subscribers. We'll be taking a look at metals, take a look at the energy space and some major cryptos, the Nifty, and let's see the Canadian market and other instruments. Otherwise, for subscribers, let's continue on.